Hey, what's going on? It is Friday, March 5th, 2021. Um, uh, I have heard many people say in the past that March 4th was the only date that formed a sentence in the English language. And I disagree with that. And I don't know how many people have thought about that, but March 4th means to march forward, but it could also mean, it can also be a command, march fourth in order, right? So March 5th, March 6th, March 7th, March 8th, so on and so forth, March 20th. Those can all be orders, which are technically sentences in the English language, right? They're short sentences, as March 4th is, but they're sentences. Anyway, I don't know why I thought of talking about that. Just a little bit of a warmer upper to get the game started and the ball rolling. So today was a pretty good day, right? Well, there's always the calm before the storm and the dead cat bounce phenomenon in the stock market, where things sometimes tend to rebound to show some strength, and then in actuality, that's just the last dying bounce of a cat that's died already after it's been thrown off a building. Don't uh, don't ask me where that came from, but it was popular. It was popular because James Clerk Maxwell, the father of electromagnetics, was a famous was famously known for experimenting on cats and trying to solve the cat body problem. I'm not gonna go into that now, but it's interesting when you look it up. But it's sad and terrifying also for cats, and no one wants to harm cats on the internet. Uh, Almost no one. So yeah, let's take a look at what's going on today. It's the all the indices, most of them, have live reinforcement today. The numbers are up for that. Dow 624 points up, S&P 175 points up, Nasdaq still down, but it's still down overall, and it's trending downward sharply, which is indicative of the tech crunch, as I like to keep calling it. But I mean, if you look, everything's a yellow candle or green candle rather today, and look at I mean, the volatility index is down, which means there's less volatility overall, right? If you take a look at the VIX corresponding to the last few days of dips within the Dow and the Nasdaq, like the severe dips that occurred in February, actually, really, when I guess everyone realized how, tech was going to be affected by their, you know, overpowering increase in the market, and just how they, they've run out of steam, basically. So, but let's take a look at energy, right? Energy is crazy. Actually, I have take a look at the S&P all-time highs, right? S&P had a comeback, and if you put in all-time high, leave out anything on Finviz, right? One of my favorite sites. You'll see that look at all the top gainers: DNV, Fang, not Fang as in Fang stocks, tech company Fang stocks, Oracle. They've had quite a bounce, right? But they've hit an all-time high. But Marathon Oil, the Gap, all these companies, well, the Gap, I mean, all these energy companies, like if you filter by energy company here, and consumer cyclicals also, you'll see that, yeah, a lot of them are having, upturns, right? Because the energy market is booming because money is being put into a market that's been essentially not looked at as much, right? Because of the tech boom of the last year. So it's one of the it's one of the rotationary sectors. Okay, energy in this case, because there's a lot of energy companies that are trying to get in to the market. So that's something, a whole total ball game to look at, which I'll do later down the road. But it's something to consider. But and this gasoline RBOB, I don't know too much about heating oil, gasoline RBOB, but I mean anything oil related, with the exception of natural gas, has really gone up. So as a commodity, it's something to keep in mind. And that sounds surprising with the Keystone developments and all that, but there's new renewed interest in energy overseas and all over the place. So I mean, and just like, yeah, filtering by energy index will just show you these are everything but natural gas has gone up. So yeah, we we should let's take a look at what the market says. So yesterday we were at a 48 for fear and greed. Previous close 48. Now we're at 51. So people are starting to get a little greedy again, right? And as Warren Buffett is famous for saying, when people get greedy, sell. When people are fearful, buy. Right. So this index, I feel, was based on that sentiment. Um, but the other thing to consider is that when people see a little boost right now, money might start flowing in, but that's, I think, still going to be overcorrected for by tech. And remember, today's big news was the job numbers for February, and they were up. I think it was like 300 something created jobs report numbers. You can see what those are, but the I think overall the unemployment rate was the big number that people were looking at, and the unemployment rate fell by 6%, or it fell to 6.2% overall, and that's really good. Though a lot of people are saying that it's not really the unemployment rate. That's that number is not reflective of the overall unemployment rate, which means that there are still systemic problems that we have to deal with due to the COVID pandemic, things still being shut down, lockdowns, things like that. We'll have to get past this hump, and yeah, I mean it's affecting distressed communities more so, as Joe Biden's economic advisor will be talking about in a little bit. But I think I wanted to uh, just play a little bit of short piece of this CNBC video so we can react a little on what the details are here. I do want to jump to the Russell, so I'm just going to listen a little bit on the jobs number. But the Russell, like, it's been of a lot of focus to me recently and a lot of people, because the and again, look at this crazy. Look at this. I looked at this yesterday, but I mean, if you look since the pandemic hit its low, right? I mean, since the pandemic hit its apex effect on the stock market, it caused the Russell to tank to about March 20th, and then it's steadily been increasing, and now it's pretty much, it went to a few days ago, was at an all-time high, and it's probably going to trace back to that amount and just keep going as small caps keep getting invested in. Uh, and remember, Russell small caps, the Russell isn't really like, you know, uh, I don't, it's interesting. Russell is the small caps, but not the smallest of small caps, and they're more like medium caps, I think, really. So, I mean, they're within the billion range. Small caps are within the penny stock range in terms of price. Those are small caps, and those have the worst volatility overall. Russell stocks have a lot of volatility. So basically, when the VIX, when the VIX acts up, the Russell can be correspondingly, stocks in the Russell can be correspondingly affected a lot more than stocks in the Nasdaq and stocks in the S&P and all that. But anyway, let's go back here.
Of course, as we said earlier, 379,000 added last month. Unemployment
sounds like a lot, but it's not, I guess.
Went down to 6.2. With us this morning, first on CNBC, the White House National Economic Council Director Brian Deese. Brian, welcome back. Happy Friday.
Happy Friday to you guys.
I assume it's a number that you guys are definitely applauding today, and I'm guessing it could have been even better if the weather hadn't brought construction down about 61.
Well, look, we're always happy to see positive jobs numbers, but what you also see in this report is that we've got a long way to go. We're still down 9.5 million jobs since the pandemic began. And
yeah, I mean, overall, like, that's what I was just saying about the jobs number. The total amount of jobs down from the pandemic, start, we're missing 10 million jobs. So that's still, overall we have what, 360 million people now almost in this country. So that's, and that's excluding people who aren't cataloged for census reasons, or who may be essentially here illegally. But what we have, I mean, we still have, that's still a bump of some significance, right? But anyway, the Brian Deese, he's the Economic Council director, so he's right now on this channel, um, I guess, trying to put steam into the, or put wings behind the stimulus idea, right? That even though the job numbers are up, which is, this is, I think, Biden's words, that the stimulus still needs to go through, which that will affect inflation fears without a doubt. I think the stimulus actually did go through, right? Like, I think it was just approved of by Senate Democrats, and I think, and Republicans as well. There was a lot of, obviously, questions on earmarks and things like that. But it's gone. It's done, and people will be getting their money, and then people will be, on the finance side, will be worried about the inflation that's coming anyway, to be further exacerbated by the stimulus. But whatever. I mean, if uh, people need to get through inflation, I mean, they need to get the economy going. We need to help these people who are hurting right now. Then, I guess we got to do what we got to do, right? Joe Manchin's name, by the way, is coming up a lot in conversations, and that's because uh, he's the wolf in sheep's clothing on the Democrat side, almost, right? So he tries to he's more of like a right wing Democrat. So he kind of flexes his muscle because he knows that the Senate is split 50-50, and it's usually down to him to um, it's down to him usually to um, to determine the vote, which way the Democrats overall vote if there's a split vote on party lines, right? So uh, he'll make a deal to move forward, and that deal will usually have elements of right wing, non Keynesian thinking when it comes to the economy in it. Um, so, whatever the case is, whatever your politics is, it's just something to note, and that's basically what happened. I'd have to go through what changes were made, last minute changes were made to the bill, but I heard they read the entire bill on the floor before it went through. So, I wonder how significant were the changes that were needed for Manchin. We can look that up also later. But anyway, the stimulus going through. Is what this guy's goal is to keep, harping on, and we'll have to see how good the stimulus actually does. Right? The stimulus is bigger than the CARES stimulus that Obama did. So, we, and again, to be fair, I think the unemployment rate's the lowest it's been even in the Great Recession. During the Great Recession, it probably wasn't even this low. So.
That's a bigger job hole than at any time during the Great Recession.
And she's just
and we saw some encouraging signs in leisure and hospitality in February. We also saw some real concerning signs as well. You saw 70,000 state and local educators laid off in February. So we got a long way to go in this recovery, and that's part.
When they say state and local legislate, we'll have to, yeah.
Part of the reason why we are going to be focusing on trying to get the rescue plan passed through Congress this weekend.
I was going to say, is that another way of bolstering support for the package? I noticed Gary Cohn this morning said the economy is...
Gary Cohn, that was Trump's financial advisor for a while until he was replaced. Remember, former Goldman Sachs president that Trump had hired into his administration, and then that famously left after the incident, the Charlottesville incident in 2017, or at least that was one of the things, according to the book by Bob Woodward, I think, Fear, that had caused Gary Cohn to leave. There was also that other guy who wrote that other book, Fire and Fury. I forget his name, but he, I think, mentioned that also the reason for Gary Cohn leaving. But they did have an economic dispute ultimately. And so, but he's still going to be, he's pushing. I think he also voted Hillary, if I remember. But anyway, he's going to be pushing the thinking that the stimulus is unnecessary.
Showing recovery, consumers are returning. The risk now, he says, is misdirected stimulus. You obviously disagree.
Look, we look at a 9.5 million jobs down. And at the pace that we've seen over the last couple of months, it would take years and years to get back just to the pre-pandemic level. And of course, that's not where we want to get. We want to get back to trend growth. So we have a long way to go here, and we also have to recognize that the unevenness of this crisis persists. Black unemployment is almost 10%, and again, we see that we've made no progress on long-term unemployment here. So while we're always encouraged to see positive things moving in a positive direction, we have a long way to go. And we also know that the kind of fiscal policy action that we're looking at in the rescue plan would really help to accelerate things across the board, whether that's...
So one can say he's being a Debbie Downer. I think even comments on this video would say that he's being a Debbie Downer because he wants to say, he wants to kind of push the agenda of having, you know, the stimulus pass regardless of unemployment numbers being better in the short term or being slightly better. Because and he's using data from the economically disadvantaged communities to bolster that idea. But you know, he might not be. There's also the way to look at it that maybe he doesn't want to tout the successes of the Biden administration too early, because that's what something that Trump did constantly. Like he would tout his successes right off the bat, you know, and you know when things didn't under closer scrutiny look as appealing, right? You know, things weren't necessarily walked back, but you know, that kind of news was kind of like worked around, right, in order to kind of keep Trump happy. So really, you know, Biden's probably, I don't know if, you know, we can find out more about the way that Brian Deese and a few other people behave, but maybe he's playing it safe, right? Because maybe what's going to happen is, I mean, the vaccination program is going good, right? But the job numbers are still low. It might take a while to get those job numbers back. So if he claims victory too early, then it will risk making him seem like Trump. You know, so it could be that, but also because he might want to. The stimulus is part of his agenda and something he promised and something that people have wanted for a while. So there could be these dual competing concerns, these dual mandates, so to speak.
The state and local level, or helping families on their balance sheets.
Well, let's talk about across the board. And I do point out that the black unemployment 9.9.
Jim
That's
Cramer.
just way too high. Hispanic 8.5. But you're sending a package of $1,400 pretty much to everybody at a certain, really at a certain income. Wouldn't you rather see that go disproportionately to the people who are unemployed?
Well, let's talk about what's in this plan. First of all, it extends and expands unemployment insurance for the millions of Americans. And as you say, the measured unemployment rate for blacks and Hispanics is what you cited. But most economists agree that actually, if you look at the actual unemployment rate, it's probably more like 8 to 9% nationwide.
So basically, there's a little bit of a verbal dance going on here. So Jim Cramer is trying to ask him whether he would rather see the income from the stimulus disproportionately spent on those disadvantaged sectors, giving the cited ones mentioned, and I feel that's a little bit of a way to. I don't know. This could be reading into it a little too much of a stretch. Knowing politics, I mean, everything is used against people, but it could be a way of also being like, well, you know, maybe they Kramer wants to expose the agenda, quote unquote, a little bit, right? That's maybe this is a political thinking that Brian Deese might have about, you know, and again, like, you know, that's probably something that doesn't really matter to him, but he probably wants him to get it out on paper or video, and you know, like, I mean, he has to be careful the way he frames it, but in a way, he's also correct in the absolute sense that you know, everybody who really needs the money should get the money, though it's hard to determine need. I mean, in some cases it's clear cut, right? You know, people who've been unemployed for a long time and you know they're suffering. I mean, they should, you know, get some of that stimulus so they can survive, right? The more conservative people, the libertarian minded might be like, well, why do they need the stimulus? They should have used their money better, or they should have had savings, right? A little bit of a reductionist argument in some senses, but some senses they're maybe right. I don't know. Like overall, all I can say is that there's lots of ways that these questions can be answered. And I mean, I can see this video has 43 upvotes and 25 downvotes, so some of it could be a contentious battle between Republicans and Democrats and liberals and conservatives, and some people just might not like what he has to say in general, right? But it's interesting. I wonder sometimes when I look at these like to dislike distributions as to what is motivating the thinking here. I mean, CNBC, these clips always have a little bit of a dislike, more dislikes than I imagine, or I imagine they would have, because maybe it's just because it's CNBC. I don't know. Anyway, I'm a little pooped today. I think I went over a lot of things that I wanted to go over. Yesterday I talked about semiconductors, and tomorrow I just might go deeper into energy, because it seems like we've got to start paying more attention. And we, as always, we want to keep an eye on the 10-year bond. Yeah, look at that. 10-year bond is 1.57. I think, yeah, it was up 0.027 from yesterday. That is kind of crazy. Well, I mean, it was up to 1.6. I think I did gain 1.6 today. So, as far as the market correction is concerned, I think the Nasdaq is going to feel it for a while until they figure out how they can, operate in this high interest, higher yield environment, right? For the 10-year bond, because 10-year is the benchmark. It's the risk-free rate, right? So, at that point, anything higher than that, anything outside of that boundary is expensive, right? And expensive in terms of risk. So anyway, yep. And here was the note about the unemployment aid allowing 1.9 trillion bill relief to go forward. Got to dig into that maybe more tomorrow. But there you go. That's it. Well, have a good night. Hope to see you next week. And catch me, subscribe, and catch me for my crypto videos this weekend, because on the weekend I think I'm going to be doing crypto. It kind of makes sense to do an overall market analysis there, right? Crypto's been suffering. Well, for a preview, let's see Bitcoin prices, right? We can go into all the details, but yeah, Bitcoin's still down, and that's just overall market volatility, I think. Really, I mean, it's been fluctuating around 50. Cardano. I mean, we can just do coin market cap, and we will see that. Just want to take a quick snapshot. Yeah, Cardano's up, Polkadot up, Binance, of course. Yeah, Binance had a humongous spike, made some millionaires there. So yeah, I think that's good. And I will see you around. Hey, what's going on? It is Friday,